Welcome to our home buying series, where we'll be looking at the 10 steps involved in purchasing a home.
Today we'll be looking at step 1, the pre-qualification process.
So put the kettle on as we serve up our first episode of this exciting new series.
Unless you're planning to purchase using cash only, step 1 in the home buying process is speaking to a lender and getting pre-qualified.
Now, what does that all mean? It means speaking with a bank, a credit union, or a mortgage company in order to see how much house you can buy.
It's often advisable to comparison shop between a couple of lenders. This way you can compare closing costs and interest rates.
If by that time you're already working with a realtor, your agent will be able to recommend a lender that is competitive and reliable and tried and tested already by your agent for previous buyers.
When working with the lenders, you'll be providing them with important information regarding your credit, debt, work history, assets and residential history. They will also want to know your social security number.
All this information will help them determine how much of a monthly payment you qualify for. They will then translate this to a maximum price up to which you can purchase.
It is important at this early stage that you're confident that these monthly payments are going to fit comfortably into your budget, and that you're also comfortable with the funds that you will be required to bring to the closing table.
We like to liken this to shopping in a grocery store. You wouldn't put items in your cart if you weren't confident that you'd be able to pay for them at the checkout. And when you're shopping for a home, this is even more important, as we were talking about a lot more money being necessary than when you're going grocery shopping.
Your monthly payment is frequently described by the acronym PITI, which stands for Principal, Interest, Taxes and Insurance.
Principal is the payment towards your loan amount. Interest is the monthly interest charged on your loan. The taxes are the annual property taxes, and insurance is the homeowner's insurance.
Your payment will also include PMI, private mortgage insurance, unless you're putting at least 20% down.
We mentioned closing costs a minute ago, and sometimes it can get confusing between all the new and different terms you'll be introduced to when going through the home buying process. Things like escrow, closing costs, and down payment can all seem interchangeable, but in fact they are very different.
The escrow deposit, also referred to as the initial deposit, the escrow funds, or simply the deposit, is something that you'll need to be mindful of, as it's required typically within 3 days of your offer being accepted. In our Central Florida marketplace, it's typically around 1% of the offer price, so for the average home in our market, it's between $2,000 and $3,000.
Generally, this deposit is a check or a wire given to the title company that will be in charge of closing the purchase. The escrow deposit is refundable for a number of reasons that will be covered on the contract and also in a future video. The deposit will count as a credit towards your total amount of funds due on the day of closing.
Closing costs are fees charged in association with getting your loan. Included are loan fees, the appraisal fee, etc. These costs are due at closing. Included in the closing cost is often your down payment.
The down payment is a percentage of the purchase price and is money that your lender requires you to bring to closing in addition to your loan closing costs. Common down payment amounts are 3.5%, 5%, 10% and 20%.
Before you begin your home search, it's highly recommended that you work with your lender to get pre-qualified before you begin house hunting. Pre-qualification will tell you how much home you can afford and can help you move faster and with greater confidence in competitive markets.
Getting pre-qualified is one of the many steps that will show home sellers you're serious about buying, and it's rare that a seller would entertain an offer without the buyer being pre-qualified and having a pre-qualification letter from their lender to present with their offer.
Thanks so much for watching. We hope you find this information helpful. Feel free to reach out to us should you have any questions about home buying.
Look out for the next video in this series, which will provide important information on how to choose a realtor. See you next time.